May was a really interesting month. And on the surface, sales dropped 14% from last year. I know it sounds bad, right? But here's the twist: homes that did sell, well, they kind of flew off the shelves in about 18 days at 98% of asking price. And prices, well, they went up for the second straight month. And today I'm going to walk you through exactly what's happening and what it means for you. Hey everyone, Sean Ryan here from the Blue Coast team at CB Southwest, and welcome back for your May 2026 Sarnia-Lambton market update. And if you're new here, every month I do these, probably for the last 7 years consistently. And make sure you subscribe so you can follow along and never miss a beat. And stick around till the end, as there's going to be a lot to cover this month. So quick agenda, what we're going to go over today is we got local stats, sales, prices, listings, inventory. We're going to look at the HPI benchmark and what it's telling us. Days on market, the hidden good news stories. We got Bank of Canada, we got rates announcements this month, and also national context and what it all means for you when you're buying and selling, especially here in Sarnia-Lambton. So let's go into the sales activity right now of what the numbers are telling us here in Sarnia-Lambton. So 154 residential sales in May compared to 179 in May 2025. And that's a 14% drop year over year. Second straight month of double-digit declines. And for some historical context, for perspective, the peak was 231 sales in May 2021, the frenzy year, and 196 in May 2026, and that was a decade ago. The last 5 Mays have all been in the 154 to 179 range. We're at the bottom of that range right now, but not historically the lowest we've ever seen. So single family specifically, we saw 140 single family sales down for the 164 and down 14.6% year over year. Single family typically represents about 89% of our market. And now if we look at the year-to-date picture, 569 total through the to the end of May, and that's down about 12.5% from the same period last year. The slowdown has been consistent really through 2026, if you haven't picked up on that yet. And why are sales down? Same story as April. Fixed mortgage rates spiked in March. That spike has stayed. Buyers in the affordability sensitive zone hit a pause, really, we start to see. And then buyers still have strong financial positions, we're seeing. So the really strong buyers are still out right now, which is good. So let's look at some pricing and what we're seeing in the market. Average price, $558,000 in May 2026. That's up about 2.7% from May 2025. Second straight month year over year, we've seen the price increase. And important, sales are down, prices are up. And that's kind of unusual, to be honest with you. Single family average, 572,000. That's up 2.7. We get the medium. We're at 482,000, down about 5.4. Average up, medium down. Let me explain that a little bit. So this is really a mixed story we're seeing. The average is skewed by high-end sales. 18 sales in the 800 to 900,000 range in May. One sale over 3 million. So luxury activity really propping up those averages, and it doesn't take much here in Sarnia-Lambton. Medium tells a different story. The middle sale, 476,000, down about 5.5% year over year. More representation of the typical home. And why both matter: average shows what's happening at a high end. Medium shows what's happening to the typical buyer seller. May's gap really equals upscale segment was unusually active for Sarnia-Lambton. So year-to-date pricing, we're looking at an average of 516,000, and that's down 2.5%. The gap is closing month over month, though, really, we're seeing. And May was the smallest year-over-year pricing decline of the year so far. So that was really good to see. Now let's look at the HPI benchmark. And that is, first of all, what is HPI? And as the home MLS Home Price Index tracks typical Sarnia home over home time, controls for a mix of what's sold, what's most reliable, measure of really underlying the value. And May the 2026 HPI numbers, composite benchmark was 497,000, single family 497, one-story bungalows was 543,000, and two stories were 440,200. And a month over month, the HPI dipped about 1.2% from April, but April was up 3.1% from March, net over 3 months, up 3.2%. The underlying value of a typical Sarnia home is up really over the quarter, which is great. 12 months ago, the composite was down about 2.5%, but bungalow benchmark was up 0.3% over 12 months. And bungalows really are the strongest segment here in Sarnia. Two-story homes down 6% over 12 months and down 2% over the past month. Really the weakest segment, two stories right now. The takeaway is the really underlying values are flat to slightly up. Not the picture that average price decline would suggest. Bungalows still really are leading the way, and they normally always will in Sarnia-Lambton. So let's look at days on market and sales to list ratio. And this is the most important section really this month I'd like to look at. Medium days on market, 21 days. May 2026. That's down from 25 days in May 2025. So they're selling a bit faster. Homes are selling, like I said, 4 days faster. And that's really a notable improvement in the right direction. Single family specifically, just 18 days down from 21 days last May. And that's a 16% improvement in speed, which is really good. Sale to list price ratio is 97.8% across the market, 98% for single families. Buyers are paying within 2 to 2.5% of the average price. And that's up from 97.2 last May. So that's really good. That's the final price that people list for. So what does that really tell us? Fewer buyers in the market, but the buyers that are here are decisive. They've done their research. They're not lowballing. They're not creating bidding wars either. And it's really quality over quantity we're seeing in this market with the buyers right now. And if you look at a quick comparison, the 2021 frenzy, 7 to 8 days, 108% over asking price, 24, 25, 22, 25 was 97% of the asking price. And we're trending better than the past 2 years on speed for sure. We're starting to see those days on market keep going down. So listing record highs. Let's look at that really quick. So new listing story. We got 368 new listings in May, and that's up 7.9% in May 2025. And the highest May listing count ever in record going back 10 years, and sellers committed to the spring market really. Single family listings, 342 new single family listings, and also multi-year high, a big spring push from the sellers we saw. So more listings, more activity, which is great. Active listings, 637 at the end of the month. That's up 2.7 in May 2025. Also, an all-time May high. More choices for buyers than we've had in over a decade, which is, I think, good overall. And why is this happening? Sellers who held off in 2020 or in 2025 are listing now. Some estate sales, retirements, downsizers. Some are really testing the market at higher prices we're seeing as well. And some are preempting potential renewal pressure for later on because we have a lot of renewals coming up in Canada. The supply and demand mismatch where listings are up, sales are down. That's why months of inventory ticked above that 4%, and which is still pretty healthy. It's actually considered a bit of a balanced market right now. So months of inventory at 4.1% in May 2026. That's up from 3.5 in May 2025, and just over a 4-month threshold. And what does that mean? So under 4 months is a seller's market, 4 to 6 months is a balanced market, and over 6 months, well, that's a buyer's market, and we're at 4.1. So technically, we're just into a balanced, slightly buyer territory. So very healthy market overall. Year to date, 4.7 months of inventory on average, slightly elevated from the 4.4 from last year. And compared to national Canadian news, 5.2 months. So we're tighter than the national market. And that matters when buyers compare really across the markets, as we're not all equal across Canada. And new sales to listing ratio is 41% in May, and that's down from 52 last May. Still a balanced range of that 40 to 60 is balanced, but on the lower end really. And what it really means is more options for buyers, which is good. Less urgencies to act, which cannot be good for sellers. Pricing accuracy matters, but it's still a functional transacting market, which I think is really good for everyone all around. So who's buying what right now? Most popular in Sarnia always is the bungalows at 72 sales, average at 607, and that broke the 600K mark. 2 stories, 21 sales on average of 576K. 1.5 stories, 12 sales, 464. Raised ranches, only 9 sales and averaged at 550. And like side splits and stuff like that, 7 sales averaging 472. Bungalows are always king in Sarnia. 72 sales equals really half of the transactions, and average over 600K for the first time in months. And the most product in our market, like I said, over and over again. The price band breakdown really is that 500 to 600K, 38 sales, the highest band. 4 to 500,000, 24 sales. 600 to 7, 21 sales. The 700 to 800 is 13 sales. 800 to 900 is 18 sales. Usually very active. 1 million to 1.5, 3 million plus just one sale. That's even rare for our market. Entry level remains thin. Only 5 sales under 300K all month. 1 sale under 2, 4 under 200, and 3K. Affordability gap is real. We're seeing more and more. It's harder. It's becoming less affordable in Sarnia-Lambton for those first-time buyers. Now let's look at some of the areas. Sarnia North, the engine of the market, 93 sales, down from 97 last May. Averaged at 495, slightly down from the 572. Still the highest volume neighborhood by far. Point Edward, Lakeshore District in there. Premium segment, 14 sales, down from 12. Average of 679, highest average in the region. And waterfront and high-end properties as well, obviously. Sarnia South, strong middle. We're seeing 16 sales, down from 18. Average price actually of 604,000, so I thought that was holding up really well. And then we look at Sarnia East, a bit of a softer market with just 6 sales, down from 13, average at 462. And the biggest really year-over-year drop in volume. And if we looked at some other, like some of the outlying areas in Sarnia-Lambton, we only saw 3 sales, down from 12, an average of 538. Out area seeing the biggest pullback really actually in Lambton County. Brights Grove, 0 sales in May. Brights Grove really goes hot and cold. There was 2 last May. So very unusual not to see actually 1 sale in May. And the pattern, the volume and the holding in Sarnia North and premium areas, the pullback in centralized and outer markets and price sensitivity segments, the core city is more resilient than really the outskirts. Like the core stays really well, which is pretty good. So we got a Bank of Canada has a rate announcement that's going to be coming out. It's probably going to hold. The current overnight rate is 2.2, held since October 2025. The 4th consecutive hold at April 29th meeting, and prime rate stays at 4.45. So this week's decision, the market pricing is 65% probability of hold, 21% probability of a cut, but 16% probability of a hike. Don't see a hike right now. I think it's just going to hold. They're going to see what the markets are doing, what the world's doing. Why is a hike even on the table? We got the Middle East, Iran conflict. We got energy-driven inflation prices. Oil prices are elevated. The Bank of Canada explicitly mentioned hike possibility in April, so who knows? The Governor April's message really was 3 points. Canada is being affected by the global events really, but they're growing. High energy prices pushing inflation towards 3% in April, and focus on preventing the energy spike from becoming persistent inflation as well. So we see what happens. Forecasters are split. TD Bank of Canada holds at 2.25. The National Bank holds. Scotiabank rises by 0.75 to 3% by the end of 2026. Most hawkish, but who knows what's going to happen? I have no idea, really. I just think it's probably going to hold in the end, and we always have to wait and see what's going to happen on there. But really, the real uncertainty right now is even the experts really disagree what this means, and really uncertainty for buyers and sellers is try not to time the market, plan for the stability, but be ready for really the moves right now is the best advice we can give you right now on mortgage rates. So the current rate as of June 5th, 2026, best 5-year fixed we saw was 3.99 to 4%. Best 5-year variable, 3.3 to 3.35. And the best 3-year fixed we saw was 4.04 and a prime rate of 4.45. So what's happening? Fixed rates risen to 35 to 40 basis points since March. So fixed rates have gone up, driven by the bond yields for the most part, which responds to inflation expectations. We got oil-driven inflation, higher bond yields, and higher fixed rates really is what we're seeing happen right now. Fixed versus variable today, the gap's about 65 to 70 basis points. Variable's cheaper on a $500,000 mortgage. That's roughly $190 a month in savings on variable over 5 years. That's about $11,000 savings if the rate stays flat. The variable rate argument, Bank of Canada most likely holding or even hiking. Variable rates moves with the Bank of Canada. The Bank of Canada holds variables stay cheap, and if the Bank of Canada hikes, variables go up a bit. So either way, you're starting from a lower base, so it's not bad. Personally, variable usually wins over the long term, so just do your homework, do what's most comfortable for you, and that's the best thing I can say for you when trying to decide what to do. So the end of the 2026 forecast really on this is some economists see fixed rates at 4.5 to 4.59 by the end of the year, which isn't really a bad rate. If oil stays elevated and Iran conflict drags on, who knows? Could lock in today 4% or higher before that. Renewal wave coming. Many homeowners on 5-year fixed from 2021 renewing in 2026. Those who locked in at a sub 2% financing, meaningful payment increasing, worth getting renewal advice early. You got about 6 months before you can renew. Look into that. National context. CREA, Canadian Real Estate Association, national stats released May 14th. April national stats up 0.7% month over month, still 4% below April 2025. And new listings came up 4.1% nationally. So 187,000 and change active across Canada. Months of inventory nationally, though, we saw about 5.2 months versus Sarnia's 4.1. So Sarnia is very resilient. Sarnia-Lambton is tighter than the national market. Important context, our local market is healthier than headlines suggest, which is very important. And CREA's economist quote is the previous expected rebound will continue to be muted, but it does not mean there will be no on-ramp of the momentum at all. Translation, the strong recovery they forecast October, but still positive. So let's look at some major housing policies and really what we're seeing right now. So this section is really important. A lot happened in March, April 2026 that will shape the back half of the year. The $8.8 billion Canada-Ontario Partnership March 30th announcement that Prime Minister Mark Carney and Premier Doug Ford announced that March 30th, 2026, $8.8 billion joint federal-provincial investment goal cut municipal development charges up to 50% over the next 3 years. That's really big on development. Development charges are fees cities charge to developers, and that gets passed on to the consumer. Currently, $50K to $100K per home in many Ontario cities. So that's huge. That cost gets passed straight to the buyers, cutting these big ones out of the biggest levers of the new home affordability, really, which is pretty good. And why this matters for Sarnia-Lambton, applications in June 1st, 2026, deadline June 19, 2026, this month, municipalities applying need to reduce the development cost by 33% for at least 3 years. If Sarnia, Point Edward, and surrounding municipalities apply and qualify, new construction costs could drop quite a bit, actually, and could boost new home supply in 2027 or more than it already has because of the HST stuff. The catch, CMHC released an analyst saying development cost cuts alone won't solve affordability. Cuts could increase variable projects by up to 14% in some cities. So it'll be interesting to see how that really works out. But it's one lever among many, not a silver bullet, which it never is, right? So the second one is really the HST rebate. It's already active. It's up to $130K savings on new buildings, up to $1 million, eligible from April 1st to March 31st, 2027. 10 months left in that window. Combined with the development costs, this is the most aggressive new home push in years. And we have seen a spike in new homes, people jumping on that bandwagon because up to $130,000. That's a lot of money on a new home. It just shows you how much tax and fees in Canada we do pay on building new home construction. It's kind of bananas when you think about it. So let's look at the 2026 spring economic update and what that means here for the market. Released by the federal government in April 2026, the key housing related announcements. We got the Canada Strong Fund, $25 billion Sovereign Wealth Fund. I don't know how this is going to shake out. I don't think anyone really knows. It's very split on what people think. Announced by Carney, it will include housing infrastructure investments, long-term play to drive supply. So we'll have to wait and see how that one works out, because I think a lot of people are split on that. Mortgage insurance rules change as well, which I think is really big. New flexibility for 3 to 4 unit residential properties, which is good. Helps unlock financing for that missing middle housing. Triplexes, fourplexes, small multi-units, which are really good. They can be built by small investors, small developers. You don't have to have as deep as pockets. I think that's a very important thing to unlock. And it could really create new investment opportunities for Sarnia investors. Sarnia is a very healthy investment market. We're still seeing rates of return here in Sarnia-Lambton compared to other cities, even London, especially Toronto. So keep that in mind if you're an investor. Sarnia is a great place for investment properties. Build Canada homes scaling up. We're at 2.8 billion over the next 5 years. The federal government re-entering direct housing development. So it'll be interesting people's comments on that. Do you think it's going to work? Do you think it's not? There's also going to be an Indigenous housing focus. We just have one in Sarnia just got built. Looks really cool. It's just on Confederation, just east of Indian. If you haven't driven by, check it out. It is pretty cool, the building they built there. And then number 4 is the Bill C-26, the 1.7 billion for housing supply, tabled by the federal government March 2026. All provinces and territories get a share, designed to really boost overall housing supply. Adds to 8.8 billion Ontario partnership as well. So a lot going in nationally in the news, federally, to maybe help with the push of housing. And we have seen an uptick, especially in the new home construction, like I said, here in Sarnia-Lambton. And then Ontario's housing target, here's a reality check on that. Ontario's 2026 budget revised the housing start forecast, now expecting 64,800 housing starts in 2026. That's roughly 30,000 units behind our target and where we need to be. I don't know what the answer is. I think they're making great strides. I don't think it's enough, though. What do you think? What do you think we need to do? What's the solution? I don't know. Province committed to 1.5 million homes over the next 10 years, so a little bit behind. Currently not on pace, like I said, and this shortfall is part of why policy moves are accelerating, so that's good. So maybe we might see a catch-up. Maybe it's a slow start for all these new initiatives. I don't know. So also another thing we're seeing with housing change, especially in some of the housing markets and the student housing market, the rental market, is immigration policy changes. There's a big shift affecting housing demand. 2026 permanent residence target, 380,000 down from the planned 500,000. I'm noticing a difference here, especially with Lambton College. That's 27% reduction from the original plan. Temporary residence caps being formalized, and then target reduced the TR share to 5% of the population by the end of 2027. So I noticed a big difference, especially in the rental market. I think part of the reason it has softened here in Sarnia-Lambton was because of that. So what's this mean? Housing demand pressure from the population growth eases, which is good. CMHC estimates housing supply gap will shrink by 670,000 units by the end of 2027. Let's see, we're starting to see a lot of rental projects actually be built in Sarnia. I think there's like 4 or 5 big buildings planned or being built right now. Some still renting. So I think that's really good, really healthy to see in Sarnia, because we haven't seen a lot of rental projects in Sarnia for a long time. So nice to see all those buildings being built right now. And less rental demand in major cities. Like I just said, Toronto, Vancouver, especially, we're seeing that. For Sarnia, less competition from migrating buyers leaving major cities. So we're seeing that percentage of people moving to Sarnia has gone down quite a bit over the COVID years, which is, I think, overall pretty good. It's still good to see a healthy amount of people moving in, though. So the Bank of Canada is really the wild card we're seeing right now in the market for maybe those people that are really planning, trying to time the market. Like I said, we got a rate announcement this week. We'll see what happens. 65%, it's going to hold. I think it's going to hold. 16% odds of hike. I don't think it's going to happen. We'll watch for that. I'll put an update in here. And so here's the other one that's going to happen. I think especially in Sarnia-Lambton, where Sarnia is a bit more tied to the U.S. sometimes than other cities. So we do have the U.S. tariffs continuing to weigh on Canada. We also have CUSMA still looming as well. So it'll be interesting to see what happens there. The Bank of Canada explicitly cited tariffs as a Q1 headwind. So, and CUSMA trade review schedule for July 2026, that's coming up. And I think it just plays into the psyche of the overall buyer and their confidence in the market. So it'll be really interesting to see how that really comes and if things speed up a little bit because of that. So key days to watch. Like I said, we got the market update June 16th. We got the Korea National May headline. There's a lot going on. July 15th, we got the Bank of Canada Monetary Policy Report. July 2026, we got the CUSMA trade review. And last March 31st, 2027, the last day to sign an agreement for the HST rebate. So you don't have to close it this year. You just have to sign the agreement this year. So keep that in mind. So keep watching, folks. There's lots going on in the housing market. The national headlines don't really affect Sarnia the same way they are Toronto and Vancouver. That's the big thing as well. And I think the big thing right now is if you're looking to buy or sell your home, do your research, really dig into things. Don't just listen to the national headlines. Talk to some experts. And I think for those people maybe that are on the sidelines still trying to time the market right now, it's impossible to time the market. We time the market, I wouldn't be here talking to you right now on this video. So just be informed, do your homework, make sure you're educated as well. Thanks for watching, and we'll talk to you next month.